FXN Trading Group. Welcome back to Forex, and we're going to go ahead and talk about price action setups. Now, price action setups are specific candlesticks that can determine where future price may be. You'll have bullish setups that can signal that the price is going to be higher in the near future, and you also have bearish setups that signal that the price is going to be lower in the near future. So in this lesson, we'll go ahead and detail the most commonly traded Forex price action setups. Now, let's talk about indecision candles. So I want to make one thing clear, that pin bars should not be confused with indecision candles. Sometimes pin bars are also called spinning tops. Okay, pin bars and indecision candles are two different things. Okay, so indecision candles basically display that there is no clear winner from the candle open to the candle close. So let's take a look at some of those examples specifically of indecision candles. Okay, and for that we'll just go to like the 4-hour time frame here. Okay, so good examples of indecision candles are right here. So these are all good examples of indecision candles. Even that one there too. Okay, so these are all examples of indecision candles. All right, it doesn't matter what color they end up being, whether it's blue, red, like this. Indecision candles are all the same. Okay, it just means that there's indecision in the market. There's no clear winner of price in the market. Okay, that's all that they mean. All right, it just says that there's no clear winner of price, and the only thing that we look for with these is we try to see if we can possibly have any kind of price reversal, and that typically happens only when the market is ranging or it's at a support or resistance area, and we have like indecisions candles that come up, and then that one could be a signal of a possible reversal coming. Okay, but just to be clear, indecision candles are not the same as pin bars. Okay, you may be asking yourself, what's a pin bar? It's a great question. Let me show you what a pin bar is real quick. That way at least you know what I'm talking about here. So this right here is a pin bar. Okay, this candle right here is a pin bar. A lot of times when they're upside down like this, and you have a long wick at the very top, like this one does, they're called kangaroo tails. Okay, so you'll hear them called kangaroo tails or pin bars. Okay, so these are something completely different. Okay, again, every candlestick tells a story. The indecision candle basically tells you that there's indecision in the market, right? Pin bars like this tell you what? What do they tell you? Well, they tell you that price started here, and within the 4-hour time range, price moved straight up, created a high, at this point here, and then sellers moved the price down and finally closed right here. Okay, so this particular area here had a lot of indecision in the market, or the sellers pushed down on price. Okay, now this right here, this particular candle is a price action candle setup as well, because it does portray, give us a signal of a possible reversal coming. And in this example here, you can see that the reversal came on the very next candle. Okay, and that's just because you can see here that buyers had full control of price, and on the very next candle they tried to push price up, but were unsuccessful in keeping that pressure up and price up, so sellers came in and lowered the price down. At the end of the day, it closed with a very long wick and a very small body, okay, which is called a kangaroo tail. And of course, that this particular candle led to a reversal in the market here, as you can see, by the next candle being a complete full bearish candle. And these are called engulfing candles here. These long ones here, long body candles. These are all called engulfing candles. The reason they're called engulfing candlesticks is because they're completely engulfing all of the previous price action in the area. So for example, this one here, this big blue candle here is completely engulfing all of these candles here. So 4, 8, 12, 16. So 16 hours of trading in the market got taken out by literally one single engulfing candle. So all of these here, that's an engulfing candle. This is an engulfing candle. This. You see the pattern here, that the engulfing candle pretty much engulfs the previous candles. And that's why they're called engulfing candles. Okay, these are clear signs of who's in control of price, right? So clearly, you can see that, you can clearly see who's in control of price. You know, buyers in control, buyers in control, buyers in control, buyers, sellers, 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 buyers, buyers, sellers, sellers, right? So these are all engulfing candles here. Now back to pin bars. So pin bars are candles that have a very small body and a very long either upper or lower wick. Like I said before, they can signal price reversal as well as price continuation. That's why I said you want to make sure that you can get confirmation after you see one of these, because sometimes it might not, reverse. It might still go up. Okay. So those are pin bars. All right. And pin bars are also, by the way, they are single candle price action setups. Okay, so pin bars are going to be a single candle price action setup. Now let's talk about double candle price action setups. And engulfing candlesticks are just as common as pin bars in the market. Engulfing candles, as I said before, are double candle setups. Setup, meaning that it is a price action setup that consists of two candles, not just one. Just like pin bars, engulfing candles can signal price reversal and price continuation. They can be used to predict where price might be in the future, either bullish or bearish. Okay, and I showed you some examples of the bearish and bullish engulfing candles, which are these here. And like I said, you can tell that they're engulfing is because they literally engulf at least 2 to 3 previous, if not more, previous candles in the market. Okay, and it basically just shows the strength of who's in control of price. Okay, and that's what the engulfing candles do. And typically, it's a double candle price action setup because necessarily when you have engulfing candles, you have next to it typically a smaller candle like this, right? So it's a 2 candle setup. Okay, you see how this one has this one here on the side. So again, this one has this one here on the side, this one has that one there on the side. You get the picture of what I'm talking about here. So that's why they're called dual candle setups. Okay. Now there is one more, which is a triple candle price action setup, and we start to get into what we call price action reversal, more of a reversal setups. And these are things that are called like morning and evening stars, are a 3 candle setup. Just like pin bars and engulfing candles, they're used to speculate, and predict future price in the market where it might be. Morning and evening stars don't generally act as a signal for price continuation, but they can act as a signal for price reversal. Okay, so a morning star is a Forex price action setup that consists of 3 candles in a specific order. Okay, so let me draw this out for you, just so I can show you a morning star here. And I'm actually going to try to find it here to see. Let me see if I can find it here for you. Actually, I'll just make it here real quick. So this is what it's going to be. And let's just go ahead and add some color to this here. So we'll go ahead and just make this one here green as well. Oh, you can clearly see what this one is here. This one will make red, red, and this one, let's just make this one green here for now. All right, so this right here would be considered a morning star example, okay? And this is assuming that price is basically coming from a downtrend. So let's just say price is doing this, right? And then we see a nice big bearish candle, and then it's followed by a indecision candle, and then it's followed again by a bullish engulfing candle. Okay, and then you'll see, typically we'll see price start to reverse. Okay, so this right here would be an example of a morning star reversal formation. Okay, to go from a bearish trend to a bullish trend. Okay, so now let me Let me draw for you a evening star. Evening star is basically going to be the opposite, essentially. So essentially this right here is going to be an example of an evening star. And this example, it's basically an uptrend here with an engulfing candle followed by an indecision candle, and then followed by a engulfing bearish candle. And then from here, you typically see the price start in a downtrend, reverse and go in a downtrend. Okay, so those are two examples of triple candle price action setups. And these setups happen a lot in the market, so you'll see them constantly. And it's one of the more common ones that you see out there in the market. Okay. Another one that you'll see is basically, it's called an inside bar setup. Okay. And let me draw that one out for you so you can visually see it there. Inside bars. So they're very similar to morning and evening stars, but the center candle is engulfed by the range of the previous candle. So meaning the first candle here. Okay. The last candle breaks and closes outside of the range of the first candle. So you see how this one right here opens. This one actually closes above where this one closed, right? So this basically created a new high here. You see that? So this would be here a bullish example. Okay. So again, we're having a downtrend, right? We're having a downtrend, right? And then we get this this bullish candle here, and then it's followed by a small engulfed indecision candle here, or pin bar, and then it's followed by an engulfing candle. Now the trick to this is that the engulfing candle actually breaks through and creates a new high here. Okay, so you see it breaks and creates a new high. Okay, now bearish, just basically it's the opposite. Okay, so here is what a bearish reversal of an inside bar setup would look like. Same concept, just the opposite way around. You basically have prices coming up, right, in an uptrend. You have a engulfing bullish candle followed by either a small indecision candle like this, or a very small pin bar with a very small wick, like I showed you before, followed by a bearish candle like this one here. And the bearish candle essentially is engulfing the previous bullish engulfing candle, and it actually closes lower like this one here, and it makes a new low. Okay, so that would be an inside bar setup for a bearish pair, or for a reversal sign for going bearish. So then it'll start to go, down. So going up, indecision, and then comes down again. Okay, so that is basically the morning star, evening star, and inside bar setup are the most common ones that you'll see in the market over and over and over again. Okay, so it's very, very important to keep these in mind, draw these out, write them down, have them in a notebook. That way you can keep track of them, and once you see one, you'll start to see them all the time in the market. Okay, all right, guys. So in the next lesson, we'll go ahead and talk about support and resistance and how we trade it. FXN Trading Group, welcome back to ForexU. And in this video, we're going to discuss support and resistance. And support and resistance is something that you're going to hear a lot about throughout your trading career. And I would say close to 90% of traders use support and resistance. So very important that you at least know about it. Whether you use it or not, it's something completely different, but at least you know what it is and how to use it. So in this video, we'll go ahead and go over what is support and resistance, how it's used. All right, so let's go ahead and get started. So what is support and resistance? So support and resistance, basically, think of it like this. Think of resistance being a ceiling, and think of support as being a floor, right? So let's just say that we have a ceiling here, and let's say that we have the floor here, okay? And what is support and resistance basically is as price is moving from one to another, so as price is moving from one support to resistance, and then from resistance over back to support, like this. So this right here, and the white line is basically going to be your candlestick chart, right? So price is basically moving back and forth between support and resistance, between the ceiling and the floor. Okay, and it's basically support is going to be an area where price seems to always come back to and get stuck at and does not penetrate it, and it respects it, and it reverses back up and it goes back up to the ceiling. Okay, so essentially you have where price is literally bouncing between the floor and the ceiling back and forth like a basketball bouncing between the floor and your hand as you're bouncing the ball. Okay, so every time that that price gets up to an area of resistance, you'll see that price starts to slow down, and then the price starts to reverse back down. And essentially, I would say 70 to 80% of the time, the market of Forex is moving sideways, or what we call in consolidation, which is basically bouncing from support and resistance like this, back and forth, back and forth. Okay, the other time, the other 20 to 30% of the time, the market it's going to be in a trend, whether it be an uptrend or a downtrend. And we'll discuss uptrend, downtrend in another video. But today we're just going to discuss support and resistance. So this is what is support and resistance. Okay, is a ceiling and a floor. Now, of course, price doesn't always move perfectly straight across into areas of support and resistance. It just doesn't do that. Okay, so what price does do is it moves in what we call waves, right? So let's just say that we have, again, it's a resistance here and support down here. And so what's going to happen is basically you have price, instead of moving in a straight line, it's going to move like this. I'll turn that to a different color here so you can see it. Right? So price essentially moves just like this, okay? And it keeps moving back and forth like that. So it goes here, comes back, it's back, back. Right? So price is basically moving like this all the time, right? It doesn't move in a straight line, it just moves in what we call waves, right? So disregard the little letters on each one. This is just so I can show you exactly how price moves in between support and resistance, okay? So this is how price moves. It doesn't move in a straight line, it moves in waves like this, okay? So sometimes it can be like this, sometimes it can be like that, sometimes it'll be like this. I mean, it can move in varied of many different forms, shapes, and sizes, okay? But at the end of the day, it moves down to, you know, from resistance to support and then to support from resistance, okay? Now, how can we use this to trade the support and resistance, right? So what I'm going to do is I'm going to pull up a chart here, and I'm just going to show you real quick what we're looking at. Let's clear everything out. Okay, so here we have a chart on a daily daily chart of the New Zealand dollar versus the US dollar, okay? And each of these candles represents a day in the market, okay? So what you'll tend to see is the resistance is always going to be at the top, right? Which is your ceiling, and support is always going to be at the bottom, okay? So essentially price is basically moving between here and here, okay? So our floor and our ceiling. Now, as you can see, just like I showed you before, that price doesn't necessarily move in a straight line, right? It moves up and down, up and down, up and down, working its way to either support or to either resistance, okay? So this right here is going to be resistance. And this over here is support. Okay, so support and resistance. Resistance is always going to be your ceiling. Support is always going to be your floor. Okay, now how can we use this towards trading? Well, if we can identify what our ceiling is and our floor is, we can use that to help us trading by either selling or buying. Okay, so if you're at a support area, then you're interested in being a buyer. If you're at a resistance area, you're interested in being a seller. Okay, now you'll notice that a lot of the times that price doesn't always make it to resistance or to support. For example, here, 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 right? Here, here. So you'll see all these little areas where price just didn't make it to support. It stopped and then reversed and then came back. So what do we do with these? So these are minor levels of support and resistance. Okay, so all these different areas where price stopped and reversed are also areas of support and or resistance. Okay, so obviously the areas at the bottom here are support, the areas at the top are resistance. Now, when you notice that there are several of these spots in the same area, so for example, this one here, and this one here, this one here, this one here. So whenever you see those multiple areas, that shows you that there's another area of resistance here. Okay. And let's say that we see prices here as well. Stop, stop. It stops down here, stops here, right? So that's an area there as well. So what we've basically done is created channels within the floor and the ceiling of minor support and resistance. Okay, why is that important? It's important because since we know that support and resistance is an area, it's not an exact line, right? It's an actual area. So for example here, this entire area here, right, would be an area of resistance, as this entire area down here is an area of support, right? This area here, and finally this area here. The thickness of the squares aren't important, okay? They're really not important, the thickness of the squares. This could be very small, it could be very big. It really doesn't matter how big or small it is. You're just trying to narrow down an area where price seems to have problems with getting past, okay? Because in those areas, we typically see either buyers or sellers come into the market. And so when those buyers and sellers come into the market, we want to ride along with them and take advantage and place our trades with them, okay? So like this area here, so like this area here, okay? There are, as you can see, price comes down and it seems to get stuck in this area. It won't get past it, right? It's reaching support, and so there are buyers in this area or in the zone here that are willing to come into the market and drive price back up, right? So when we get to these areas here, these are the areas that we want to pay attention to, because this is when we want to get into the market, when price is in these areas here, okay? This gives us the best chance to make money in the market. We want to be smart about when we take trades. We don't want to just take trades anywhere in the market. We want to take trades as smart as possible. So we want to take them in areas of support and in areas of resistance. So all these areas here are areas where you can potentially have setups of buying and selling using just purely support and resistance. Just letting price get to that area of support and resistance, and then looking for either buyers or sellers to start coming into play and driving price the opposite way so we can get into trades. Okay? So again, support and resistance. So one last thing about support and resistance is, let's say in this example here, buyers drove price up, came up to an area of resistance, came back down, and then drove right through that area of resistance. Okay, now buyers came up to a different area of resistance and got stopped out. Now the previous area of resistance, because price has surpassed it and is above it, now this becomes an area of support. Okay, Same thing if we're going down. If we're going down here, we see an area of support, price holds, comes back up, and then drives right through it to a different area of support. This area of support here that was previous support is now resistance because price is below that area now. Okay, so just keep that in mind, that price, wherever price is, if price is above or below, it's going to be, the resistance is always on top, support is always at the bottom. All right, guys, I hope this video has gone through with support and resistance for you. You found it valuable. Let's go ahead and go on to the next lesson, and we'll be back shortly. FXN Trading Group, welcome back to Forex U. And in this lesson, we're going to talk about Forex reversal patterns. And specifically, we're going to talk about 3 of them that you see very, very common in the Forex market. Okay. And I'm going to first draw these out for you so you can understand what they look like. And then we'll try to find some on a live chart. Okay. All right. So the first one is like this. Price goes up, price comes down, price goes back up, and then price rockets straight down. Okay. Now this particular pattern is called a double top. Okay. So that's what this one's called here. This one's called a double top. Let's go on to the next pattern here. Next pattern is price moves down, comes back up, actually comes right back down, and then finally breaks out like this. And this one is called a double bottom. Okay, so that's double bottom. So double top, double bottom. All right, and the third one is like this. Price goes up, comes back down, okay, now what is this one called? This one is called head and shoulders. All right, so those are the 3 patterns that you'll see very, very common in the Forex market. Okay, now why are these patterns so powerful, right? Why do we see them? Okay, well, these specific patterns, and we'll talk first about double tops here. Okay, now what is a double top? Basically, on a double top, we basically have, and remember, these are reversal patterns. So we're talking about price, and let's say just in the double top here, we're talking about price that has been in an uptrend, right? It's been moving like this, been moving like this, and then all of a sudden it hits the top of a strong resistance area, comes back down, hits structure to the left, and then comes right back up and retests that same resistance area before dropping again. Okay, and essentially that's what creates the M formation here. Okay, now not all of your double tops are created equal. Okay, so what constitutes a double top? Because just because you see an M formation in the market doesn't mean that is an actual double top. Okay, so just keep that in mind. And we're going to go into depth as far as what is considered a double top, what is not considered a double top when I show you some in the charts. Okay, but this is double top is basically a reversal point from when price is being bullish, comes up, and it comes up, touches resistance, comes down, goes back up to retest, and then comes down again and breaks through. Okay. The double bottom is the same way, but just opposite. So we're talking about price coming down, sellers having control, hitting support, coming back up, going back down to retest support, and then failing, and then breaking to the upside and starting a whole new pattern back up to the upside. Okay. The head and shoulders is a pattern. Think of it like a 3-point crown, right? So you have 1 point here, 2 points, 3 points, right? So each of these points here, these are the shoulders, and then this is the head. Okay, so we have a left shoulder, right shoulder, and a head. Okay, and that's what makes up a head and shoulders pattern. Now, the head and shoulders patterns, a lot of times, will not look perfectly like this. Okay, and I'll try to find some in the market so you can have a look at them, and you'll see the difference. There is one more, and that's an inverse head and shoulders, which is basically this upside down. So it's basically like this here. So same thing as a head and shoulders, just inverse of basically inverse meaning upside down. Okay, so that's as well a pattern that you'll see in the market. Okay, so these three patterns are the patterns that you're going to see in the market over and over and over again. Okay, write them down, draw them out, put the names on them, because you will see these over and over and over again in the market. Okay, so let's go ahead and see if we can spot some double tops, double bottoms. Okay, and that way we can help you identify these. All right, here is what looks like a head and shoulders pattern right here. So here's the left shoulder, the head, the right shoulder, and the rest of the body. Okay, and essentially the rules when trading these head and shoulders is you basically sell from the neckline. Okay, so this is your trade here. Okay, that's your trade. All right, let's see if I can find another one here for you. Here's another head and shoulders. This is an inverse head and shoulders. Right, so there's the shoulder, the head, the other shoulder, and then you'd be buying. See if I can find you some double tops here, or double bottoms. is another inverse head and shoulders. So you can see that there's a lot of those patterns here in the market. Okay, here is a double bottom, and it's fairly big, obviously, but it's not perfect, but it'll definitely work. So price came down, went back up, came back down to retest, and then resumed back out and made a W. There's your support. So price came down, came back and retested it, and then was rejected again. Here is a double top. So price came up in an area of resistance, and then price came down, came back up to retest it, and then you see price went ahead and moved away. Created an M formation here, like this, and that would be your double top there. So you can see these patterns are very, they're very common in the market. You will see them quite a lot of times here. So here's your double bottom here. So your price came down, came back up, came back down to test it, and then finally broke out. And here's your level of support. Okay, so that's a double bottom there. All right, so again, you'll see these all over the market, guys. Once you start to spot them, it's like when you buy a car, when you buy, like, let's say a Honda Civic, and you start driving a new Honda Civic, and you notice, like, every time you go out, everybody has a Honda Civic now. Same kind of concept. As soon as you start seeing these 1 or 2, 3, 4, you literally start seeing them all over the place. Okay. So one of the things that I want to talk about before I end this lesson is what constitutes a double bottom, what constitutes a double top. Okay. And it's very important that you get this part right, because if not, you'll be thinking that everything is a double top and everything is a double bottom when it's really not. Okay. What I'm going to do for this example is I'm going to bring up a graph that I did. That way I can kind of show you. Okay. So hopefully you can see this, but here is an example of a double top, right? And the biggest thing that you want to make sure about a double top is that when the second leg here, when this leg here goes back up to retest, okay, when it comes back up to retest this area here, it is very, very important. When this area comes back up to retest here, very important that this candle, the one that comes up in retest, cannot close above this candle here. Okay, so this candle cannot close above, so this candle cannot create a higher high than this candle. Okay, this candle has to be on or below the high of this candle over here. Okay, so if you see something like this, let me throw this back here, and if you see something like this, I'm just going to draw it out here for you, so you can visually have. So let's just say, for example purposes, that this here is one candle of the double top, and this is the other candle, right? And of course we have, let's just say we have the price that moved down and back up, right? So we're creating the M's here. All right, you follow me? Cool. So let's just say that these two candles are the two major candles, right? What you don't want is you do not want this candle to close above this one like this. Okay, so very important that this candle cannot close above this. Okay, it cannot close above this. It has to stay. So this candle here has to stay like this, below that. Very important. Okay, now one thing that it can have is it can have these wicks, right? The wicks don't matter. We're talking specifically about the body. Okay, the body of this candle cannot close above the body of this candle. If it does, it is not a double top. Okay, the wicks could be as long as possible. It doesn't matter about the wicks. We're literally just talking about the bodies. Okay, so this body here cannot close above the body of this. Okay, if it does close above it, it's not a double top. Okay, and also double tops and double bottoms. This is the same rules apply as well for double tops and double bottoms. Okay, also you want to make sure you have a V shape in the middle. Okay, a V shape in the middle. All right, not this. Okay, not this, not a U, but a V. Okay, that would be considered a double top. All right, so those are the two rules with double tops and double bottoms. Okay, so same scenario as before is if you're thinking about a double bottom here, right? You want to make sure that this candle here, this blue candle, does not close below this. Right, so the candle cannot be like this. Right, it's got to be even. The wick doesn't matter, just the bodies matter. Okay, the bodies have to be even with each other. This can be like this as well, though. It can be like this, and the wick could be touching. That is absolutely fine. The only thing that we do not want is the body to be over that line. Okay, so it could be like this. It could be down here in a long wick. It doesn't matter. What we're interested in is this not happening. Okay, and that will make sure that you get into a correct double bottom or double top. All right, guys. I hope you enjoyed this lesson, and we'll be on to the next one.
Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntradinggroup.com. Once again, guys, thank you so much. I'm truly blessed.